What's up, everybody? Welcome back to Trading Wars. I'm going to be continuing my beginner series today, and we're going to be looking at the best price action patterns to trade in 2020. And the way I'm going to be doing this is looking through different stocks and recent examples to help drive home the point. So we're going to start off right off the bat with Apple, looking at the daily chart, and we have two specific price action patterns here. We have the hammer candles as well as the Fibonacci continuation trade. So this hammer showed up on Apple on March 23rd. And for each one of these price action patterns, I want to explain why it works and how to trade it. Okay. So for the hammer, if you haven't looked at my previous candlestick video, please take a look at that and I'll explain more about the psychology. But essentially, what it means is the market tried to push Apple lower. Short traders tried to push Apple lower. But when we got to the end of the day on March 23rd, buyers stepped in and pushed this market back up. So this is what we consider a trap. For everyone that was hoping that Apple would continue lower and continue to crash, they got trapped because the buyers came in and put in big buying power throughout the day on Apple, and we have closed with a hammer candle. So how you actually trade that is you want to enter above the high of the candle with a stop loss below the low, because you know that the buyers that entered on this day, their stop loss will be below the low of this candle as well. And if you were able to hold on to Apple since March 23rd, you could have been up a significant amount of money. But that's not part of this video. We're going to continue with the patterns. Okay, guys? So the next pattern that shows up here is the Fibonacci pattern. And this pattern is very advanced and it's sometimes complicated. But essentially what it is a continuation of a move, continuation in the direction of a impulsive move. And on Apple, we saw from the 23rd to the 31st of March, we had a big push up, and for everyone that missed the hammer candle buy, their next opportunity would be on a pullback. And what the Fibonacci measures is the distance between the move and different levels where might act as support for people who missed the initial move to get back in. And guys, this is what we see exactly here at the 50% retracement of this move. We have a nice mini hammer candle that pops up, and this would be your entry reason to go long. So this is a more conservative approach on taking an entry after a move has already happened, and it's meant to be a continuation in the direction of that move. Okay, so how you would enter this trade is you would get long above the high of the hammer with a stop somewhere either below the 618, the 786, or the full distance of the initial entry. And your targets on the way up would be these different Fibonacci levels outlined here. Okay, guys? So this is Fibonacci pullback to Fibonacci extension. And with the fibs, what you'll notice as it trades in harmony. So if the 50% pullback trades, the 50% extension is usually where the target would be. And you can see right here when we get to the 50% extension, we have this big selling pressure and this pullback from profit takers as well as short traders. So what this means, guys, is that at these levels, they're a line in the sand. They are levels of support and resistance that you cannot see from the chart. And the reason that this works is because of trend continuation as well as algorithms and different bots trading at predetermined levels. Okay, so I hope that makes sense. So now we're going to move on to Nike, looking at the hourly chart for different setups. Again, guys, so we had a hammer candle here in the corner, and the same psychology. Shorts tried to push the market, but by the time this hour closed, buyers stepped in and pushed it up. Entry above the high with a stop below the low. And as you see, guys, we had a nice continuation higher. And now we're going to be looking at the double bottoms and double tops, which are very important patterns. They have a high probability of winning, and they are very patient depending on support and resistance. Okay, so if we look at this double bottom setup on Nike on the hourly chart, we had a clear level of support that was established. So you always need one level of support established, and then the double bottom or the double top essentially touches that support twice. Okay, so when we get back to this area of support identified, we have a engulfing candle, which is the setup here and proving that this area is a support. So this is at around $83.50. The buyer step in and want to purchase Nike. So how you would trade this, you would enter above the engulfing candle, stop below the support, and take it to wherever you see fit. Okay, guys? So you could take the extensions 2 to 1, 3 to 1, depending on what your comfort level is. And the same thing is true for a double top, is just the reverse. So in this case, we have a clear area of resistance that was established where Nike had reversed from in the past, which was around $91.40-ish cents. And then when we get back up here, we have the same price action patterns, nice engulfing candle, entry below the low, stop above the high, and we have the clean rejection from an area of resistance. And then guys, you can trail this down, take it to 2 to 1, 3 to 1, whatever your system is. But essentially, these are high probability setups that work often, and it comes from a predetermined area of support or resistance. So the psychology behind it is, for a double bottom, buyers like this price, 83.50. They believe it's a fair price for Nike, and that's why they come in with their orders. And for the short side, they believe that 91.50-ish is an area where Nike is overpriced, and that's why we have these movements from these levels. Okay, so moving on to our final example, get rid of all these pop-ups, guys. We are looking at SPY, and we're looking at a 5-minute chart for some day trading opportunities. Okay, so we're going to start off with a Fibonacci setup. So a lot of times right off the open, guys, we'll have an impulsive move in one direction and we'll have a pullback. So as you can see here on the 5-minute chart, we had an impulsive move up, a pullback to the 618, and then profit taking going at the extensions of the 50, 618, and 786. So how you would trade this is you would wait for the move, enter on the pullback, with an entry above the high, stop below the low, and take it to the targets. Okay. And we also had a nice example of a double top here where we have a clear area of resistance established. And then on the very next day, we have a nice shooting star inverted hammer candle set up right at the high. So you would have an entry below the low of the short with a stop above the high. And as you can see, guys, that turned out being the week's high. And if you were able to play this correctly, you could have made, 18R, which is equivalent to 30-ish% of your account. So that's a huge winner. So these double tops, double bottoms, very reliable, very good setups. And then I'm going to keep going. I had a few more examples for you guys. So again, Fibonacci, we had on the May 14th, we had a push up, a pull back to the 50, and a trade exactly to the 382 target. Okay, guys, so fibs are very good, very reliable because they're based on trend continuation. So you're trading with the trend, and the trend is your friend. And we have clear targets, clear risk management. So I really like trading fibs. It takes a little bit of time to get used to, but once you do, it's pretty straightforward. And then the last thing I wanted to talk to you guys about are tweezer candles. So tweezers are very rare. So I even have a scanner on my trading view. This is free. I added this indicator tweezer scanner, which will highlight the candle in a dark green color if it is a tweezer. So what a tweezer means is the low of this candle, so as we can see above 281.08, is the same low of the previous candle, so 281.08. So in that case, guys, this means that this area is an area of support on a smaller time frame. And the shorts attempted to push through this many times, but they have failed. So with that, a tweezer, you would enter above the high with stop loss below that exact tweezer because you know it's an area of support and you can take that for however much R you want, depending on your system, okay? And so tweezers can work as tweezer bottoms as well as tweezer tops. I don't really have a tweezer top example right now. Like I said, these candles are rare. Here's another tweezer bottom example. Let's see if we can find a tweezer top for you guys. Here's an example of a tweezer top over here. In this one, in this case, this one did not work, but here's another tweezer top right here, which ended up being the high of the day, guys. So tweezers are very powerful, but very rare. So I would not 100% rely on them. They're nice to see when it happens to confirm a certain direction if you're already in. But the bread and butter go-to guys would be the hammers, the fibs, the double tops, and the double bottoms. So the Fibonacci is a continuation of a move, whereas all the other setups are really traps, where one side gets trapped because they're trying to go lower or go higher, but they get reversed on. So that's why those patterns are so strong, because when you have a reversal, it forces the other side to throw in the towel and give up on their direction. Okay, guys, so I hope that made sense, and I hope I showed some good examples. So these are the patterns that I rely the most on in 2020. They work well. They have good win rates. So before you use any of these, though, definitely do your due diligence and you know look through a few samples and make sure that the win rate is positive and you have good target setting and good stop losses. Okay, so I hope this video helped. Please comment, like, subscribe, and then we're going to continue on with the beginner series. The next topic we'll be looking at is really putting things together, putting a trading plan, risk management, and things like that. Okay, guys, so enjoy the rest of your day, and we'll chat soon.